All right. Give it a second for everything to catch on up. We are live on YouTube. We are live on Twitch. And we are trying to get live on Kick. We will see if it goes on or not. Might have to do some adjusting in the background. But regardless, I hope everybody's doing a phenomenal beginning of the week or having a phenomenal start to the week. We are here prior to the Rocket Lab launch, which is about to happen in about an hour and a half or so's time, is when the stream goes live. But I believe, what I'm understanding, they're probably going to launch closer to 8 p.m. Eastern, 7 p.m. Central. So between now, this stream, and that stream, we'll probably give ourselves a bit of a break, but wanted to run home and have the opportunity to stream, hang out with y'all. These dates and everything are wrong. Let me take these off because I don't want everyone thinking that's the actual date and numbers. Let me pull up the Robinhood app. And let's see. Let's go to Legends. Sharing everything okay? There we go. Let's get everything looking like that. Let's see. How did everything look like at the end of the day? So the VIX is coming down. The SPY back at 592, almost 593. So that's interesting to see. The Russell 2000 at 205, 206. The Dow Jones at 423. We have the Qs at 523. What else we got? So we got Palantir holding in there. Okay. Pretty much flat on the day at 132. Looks like it bumped all the way up to 133 at some point. Rocket Lab having a bit of a retracement over the past couple days. So we're down to 26.66. It opened up way low. It was like in the 25s at one point. Thought about adding. Just couldn't get around to it. I was in and out of meetings in the morning. This afternoon is pretty free. So I could have, but by the time it was then, it was already north of 26 again. Bitcoin hanging in there. It was at one point at like 106, 107, 108. And now it's retraced back to like the 104, which is the equivalent of just under 60 on IBIT. So interesting to see. Very interesting to see. I'm curious. I'm curious what's going to end up happening with Bitcoin. I'm having a conversation today, strictly and specifically on Bitcoin. We were kind of talking about, do we still think that we're going to have a year-end rally? I'm very convinced, just based off of what I know from Bitcoin in the past. Maybe we can open this bad boy up. Can I expand this? I'm not good with this Legends thing yet. I'm just got a regular Robinhood. Let's see. We got some Bitcoin here. Oh, we're up to 105. Very good. Yeah, you end up always having these like weird cycles, right? And this is the past 5 years, so it doesn't include everything. You always end up having these double hump sort of cycles with Bitcoin. And so I'm anticipating, we're not 100% out of the woods yet in terms of a peak. I think what we're going to see is we're going to see this second hump here really start to move upward at some point. Whether or not that's true, some people think we've topped out. I'm still convinced that we're gonna head upwards. Personally, we're gonna hit the 150. But the later I'd say we get into the cycle of Bitcoin, I would say the more I'm starting to think that we might not actually hit north of 150. So it makes me question it a bit in that respect. Let's just see. Was there anything crazy that happened on CNBC today? where they want to pull up CNBC TV. Let's see if there's any crazy videos or anything like that. Oh, this might be something. Hold on. Let me make sure I have everything on. I don't. That's why I couldn't hear it. But let us share this really quick.
Well, one of the investors profiled in The Big Short is not willing to take on a lot of risk right now. Let's bring in Steve Eisman, host of the Real Eisman Playbook podcast. He's former senior portfolio manager at Neuberger Berman. Steve, great to have you with us.
Thanks for having me back.
Podcaster. Now,
well, I mean, look, he goes from Steve Eisman's suit and tie.
And now he's got a podcast wardrobe.
He always looks good, though.
Yeah.
Valerie's doing a great job. Yeah, anyway.
So my wardrobe has been redone by my wife and daughters.
As it should be. All right. So in terms of not willing to take risks, why not? Are you worried about valuations? Now, what is your biggest concern?
I have one concern, and that's tariffs. That's it. I mean, the market's gotten pretty complacent about it, but, you know, in any trade negotiation, the details really matter. And I think negotiating with Europe about tariffs is incredibly complicated because each country effectively has a veto on any issue that it wants, that thinks it's important. And I don't know what's going to happen with China. I don't know how to I just don't know how to handicap this because there's just too many balls in the air. So, I mean, I'm long only. I've taken some risks down, and I'm just sitting pat.
What do you make of the action in the bond market? And I know, you know, we've been on a number of panels in the past, and you said I can't think about the deficit. It matters until it matters.
The same way. I mean, you were talking Jamie Dimon before.
Yeah.
And every couple of years, with all due respect to Jamie Dimon, who's a great CEO, Jamie Dimon likes to get on his soapbox and start uttering nattering nabobs of negativism.
Hold on, nattering
nabobs of negativism.
Very Dr.
That's actually from...
That's alliteration,
just,
guy.
You know,
that's what we call alliteration.
William Safire wrote that in the 70s for Spiro Agnew. It was actually very famous in its day. I like to use it once in a blue moon.
That was the time.
Okay.
Yes, it was.
Yeah.
Well done.
So when Jamie gets on that, nabob soapbox of his, I tend not to pay too much attention.
All right. So you don't want to take a lot, but you're still long only, and you're still long, and you're still in, I would assume, Mag 7 heavily.
I am.
So you're not. Have you changed that position at all? Lightened up?
I mean, I've lightened up a little bit on pretty much everything, but I'm pretty invested.
Yeah.
So I think it was the last time that I was on when you were on, you talked about NVIDIA and Jensen Huang.
Yes.
And how you have never seen anyone sort of, I don't know if it was confident or something to express confidence.
I mean, those numbers were wild.
Yes. So that was a wild
act. I mean, you think about it, what is this, a $3 trillion company whose revenue grew 69%? I mean, it's unbelievable when you think about it. It's insane. So I just think the AI revolution is early. But, if God forbid there's a trade war, none of that will matter in the near term. It just won't.
What do you make of the gold market, Steve? Because, I mean, it sells off, but then it comes back on days like today, raging back. Karen mentioned copper. I mean, I think the gold market is trying to tell us all something. Thoughts?
I'm not a gold guy. I tend
I'm not
to
a gold guy either.
To gold, I really don't.
So, by the way, Steve, it is a real Don Johnson look you're working tonight, and so I'm using that as
my wife and daughter hopefully are watching, and they're taking the compliment.
100%.
100%.
It's a compliment, and that was probably when Miami Vice was run. That was probably the last time we balanced the budget. Now I know you don't care about the deficit on some level, but I do think it's relevant at least around the times it appears that this administration blinked when we had a 10-year auction. And there was certainly the rest of the world was paying attention, and we were seeing a spike in the 10-year. That was a combination of a lot of themes you've at least listened to for years. A lot of these themes aren't new. In fact, new.
They're 40 years old.
Correct. So therefore, you at times have played that theme, at least the theme around where the system was either over-levered and there was a lot of...
I never played the deficit theme. I mean, I sat in a room with Pete Peterson in the 90s when he was nabobbing about...
All right, I've had enough of that one. All right, let's just see how everybody is doing so far. This is the first stream we are doing on Kick. It's not showing me that I'm connected, but I did see some folks in the chat that are on Kick. So thank you guys for tuning in. the first stream on Kick. We are live on YouTube. Unfortunately, I can't do more than 3, even though I pay over $500 a year for StreamYard. Apparently, I can't go more than 3 destinations. So I'm starting to get pretty frustrated with StreamYard. Might end up kicking it over to OBS. But that would mean it makes it a little bit more difficult to get other people in on the stream with me. So I'm going to try to look for what's going on with that. But it is what it is. So let's just see what's going on. We got Rajab, we got Braden, we got Miss Junebug, we got Gamaza, we got Troy, Juan Carlos, Trucker Rob, Doug, Swaggy Will, Miss Julie, Anthony Burke, Justin. We got W Dill on Kick. We got Ray Bay, Ruggedy, Turkstein. We got Doug. I think I already got Doug. Let's see. Did I miss anybody? SVH. Let's see who else we got in here. Pizza Picasso. We got Dougie D. Awesome. Sorry if I missed anybody. We got Thwan. We got other Matt. All right. Looks like we got Anthony Burke. We got Connor Tatum. All right. Shockproof. We got a bunch of folks in here. So appreciate everybody, all 86 of you guys for joining me. Appreciate Amit wasn't able to do a close today, but we are here trying our best. I'm going to go through some tickers. I'd love for you guys to throw out any particular tickers you want to look at. If there's any news you want me to cover, let's just hop in and go through. I did a brief look at SPY, Bitcoin, etc., but no harm in doing another round. So we got Bitcoin at 105. Let's check out the Rocket Lab, see how that looked today. 2664. Let's go like the past month or so. So yeah, you do see that little pullback there. 29 or so. I was really hoping we'd kind of hang out at the 30 mark for a little bit, but 2660 is not a big deal. I think a lot of it has to do with the ironings out of the ATM that's probably happening in the background. You got 1 or 2 percentage points here or there being offered at the money to be able to acquire Geost. And if you guys don't know what the Geost acquisition is all about, we've gone through it over the weekend a little bit. It's a company that really focuses on missile tracking, infrared, Earth observation sort of stuff. And with that, they've gotten some work done in the SDA tracking layer, number 1, tranche 1. Tranche 2, they were up for that, but unfortunately Sierra Space went with a different contractor, so it doesn't look like they're going to be part of Tranche 2, but they are a large component and have potential for Tranche 3. So I think that combined with Minarch, it'll end up being a really good opportunity for those guys over at Rocket Lab. So they're shoring up the cash, I'm sure, which is causing some movements in the stock price. We got the S&P, which is looking pretty healthy, pretty much flat after hours, but up 0.5% throughout the day. It looked like it went from low to high. So that's pretty good. I'm curious to see, actually, because Bros at one point broke below $70, and that was today. Okay, I wasn't sure if it was last week or if it was today. So yeah, for some reason it broke below $70 this morning. I guess the whole market was down this morning to an extent, and throughout the day it recovered a little bit. Still down, but $72. You can't complain with that. Let's look at some of Matty Mullah's other favorites. Venture Global up to almost $12. We're starting to really reverse on this one, up about 37% in the last month. So appreciate a lot of people we got in super early on this bad boy. Starting at the $24 mark, I think, is when a lot of people started dipping their toes. So this is going to be one of those ones that you're going to want to hold for quite some time. So appreciate that. We got some people in here early. Here's just me adding, what is it? I think they're like $100 or something every other week or something like that. So that's what this is. This is 1136, 700 shares or so. But majority of my shares are in my Fidelity individual brokerage account. This is just this is where I do like my weekly ads. And then for my Fidelity, I do a little bit of Bitcoin in the Fidelity, but I do majority of like my small Bitcoin ads here. But in Fidelity, I mostly just drip and try to buy more S&P 500 SPY mostly. And so, and actually, maybe this is too much detail. Maybe you care, maybe you don't. They basically at our work switched it from, we're still going to get a 7% match. And so I was always doing a 7%, addition to my 401k plus a 7% match get me to 14. They're going to do a 3% non-committed contribution or something like that. So basically, without me having to match 3%, they're just going to give me 3%, which is great. And I think that allows them to claim some basically like, oh, everyone's guaranteed, nobody can not contribute to their 401k. Just makes their numbers look good from an HR standpoint. So there's that piece. And then the rest is a 4% match for a total of 7 maximum. So I'm going to take that 3%. And I'm just going to put in my individual brokerage account, invest in the S&P 500 because that's what I do in my 401k anyway. And so at this point, my 401k is doing well. So if I ever need to fall back on it, it's kind of my fallback plan. If I ever need to fall back on it, I have that. In reality, I mean, the only thing I really use my 401k for is a little bit of borrowing against. So like if I need some short-term cash, like these real estate deals I've been doing over the past year or so, a couple years, I'll just borrow 20 grand from my 401k really quick, pay it back when I have the cash. I generally don't let them, sit on my books for a couple of years. If I have the opportunity to get an influx of cash, I generally pay it off. But I pretty much use it as like a bucket, but unfortunately you can't, at least for my plan, borrow more than 50,000. I could roll it over to an IRA, and then be able to take out contributions however many years from now. But, maybe I'll have a plan to do that or something like that. But for now, just continue to add to my 401k in that respect and use it as a bucket for whatever I need. And right now I'm like, only have like 11k or something borrowed, which I thought about just writing a check this morning and checking it off. But only cost me like $150 a month or something like that. Super low interest rate on it. So I don't know. Maybe I will. So that way I have a whole bucket of 50 grand in some time. We got Venture Global. I heard somebody chirping up about next decade at the end of the day. Let's see what happened with that bad boy. Okay, so it was down, but it offset. It's back to $8.30. I'm curious if there's any particular news about it. Anything? There's another one that I just do some normal regular buys in. Majority of it, once again, in my individual brokerage account. But let's see if there's any news on next decade in particular. Nope, 4 days ago. Yeah, nothing from what I'm seeing. Let me just double check on X. Somebody was saying that there was something that came out, but 9 hours ago, Kingfish tournament. That's pretty much it. And I guess for those of you guys that haven't really been paying attention over the weekend, this is news, I guess, is I believe it was JERA, which is a Japanese energy company, which is a joint venture between like Tokyo Power and somebody else. I think it says it in here. But they're purchasing 2 MTPA. And so Train 5, I think, is 5 MTPA or 6 MTPA, something along those lines. And so does it say who JERA is in here? So anyway, now that we're pretty much maxed out when it comes to Train 4, and we're just waiting for that to be FID'd, now it's really just hoping that we are able to do something similar on Train 5. And so 40% of it has already gotten pretty much all the contracts that it needs. So good on that one. We talked about Palantir in a brief look, but I'm curious what it ended up looking like. So we did see a spike up to all-time highs. I know Mitt talked about that on the open, the 134. all-time high. So we're kind of leveling off here at this 130, 135 range. Over the last 6 days or so, or into the weekend. So I'm curious what ends up happening with this, because we do see a double top. If you go to the year to date, kind of a double top. We did blow through the peak of it, of course, 125. That's what we kind of saw in February timeframe. So kind of curious if this is going to be, you know, where we kind of level off at. I don't know. I don't know. I think it's curious to see what ends up happening. And I guess there's really no catalysts in terms of earnings reports or anything like that, except for the next 2 months. So generally speaking, they report the first Monday or Tuesday of the second month of the quarter. So we're now in the last month of the quarter. So that means we'll have to go through all of July, and they'll probably end up reporting the first week of August. That's pretty typical for Palantir. So we have about 2 months before we actually see any numbers. And to be honest with you, man, I mean, I know we kind of talked about it a little bit on Friday with Palantir Weekly. So shout out to those guys. If you haven't watched it, it was a really good episode, I thought. Maybe I'll post that in the chat really quick. But, you know, Palantir is a $300 billion market cap at this point. And so to me, slightly extended in terms of valuation. I think a lot of people can agree with that. So, I mean, if you look just from a 5-year perspective where we were in November 2022, you know, $6 or $7 all the way to where we are today, the pendulum has completely swung. And so do I think we're going to zero? No. I mean, I like to joke about it, but do I actually think we're going to zero? No, I do not. And so where do I think we actually will pull back to? It's anybody's guess, really, but the valuation needs to settle in a little bit, you know? And some people might say, well, Matt, we just did a 50% spike, you know? Like, what more do you want? But the whole market took a 50% spike, right? And then the whole market readjusted and swung back to pretty much all-time highs. So it digested it and had no problem. My thought process is, you know, in contrary to what the current market looks like, what are we actually going to see Palantir do, and how is it going to deviate from the market? And will it kind of come back to reality? Because right now we're sitting at a pretty extensive price to earnings. Price to ops cash is 300x from fiscal year 24. And so, you know, yes, you have this projected 38, 39% year-over-year revenue growth for fiscal year 25. And so there's a little bit of happiness with respect to that. But if we see a 3 handle, I think, in the second quarter, it's going to be tough. You know, I feel like we're pricing in the fact that Palantir has been under promising and over delivering. And so if they hit a pivot point where, unfortunately, they under deliver that kind of forecast that they've kind of been giving, then it might be put them in a tough situation. But overall, company's in phenomenal shape, doing well, growing well. It's just, hey, stock prices run, you know, and it's hard to kind of do that and keep up with that when your stock kind of continues at that pace. Let's see. I was just looking at something and it disappeared on me. Let's see, what other things do we got? If there's any other folks. Yeah, I do. I'm curious. The bond market, I'm always still really grasp. And so Fast Money was talking about it, and I want to listen in and see if I can get some insights on it, because it's one of my weak points. So let's take a quick look and listen here.
Well, meantime, let's get to a major riddle forming in the markets today. On top of that weak construction number, the ISM manufacturing index dropping for a 4th straight month. That disappointing data helped traditional safety trades like gold rally, the precious metal settling at its highest in nearly a month. Bonds, on the other hand, couldn't seem to catch a bid. The 30-year yield hitting 5% again, while the 10-year closed back on 4.5%. So why isn't this part of the risk-off trade working in light of signs of a weakening economy? We were musing about this on our 12:30 call that we have on a daily basis.
We were musing. And we muse about many things.
That's true.
In fact, I think Guy was musing about how you doing with your Yankees? You had a tough weekend
Yankees
in
were
LA.
fine.
And
I mean, you take
could have
one
pitched the
of
ninth
three.
inning on Saturday better than
that's
that guy.
the thing about baseball. They play 162, Tim.
Okay.
I don't get overly excited in May and June like some Met fans that I know.
Okay, well, we play.
We shouldn't be musing on the show too much.
And we play every day here too as well. So if you think about today's market, it was the combination of, I think, the most important forces right now, which are the Fed. We had Waller yesterday. We had Goolsbee today. We had some Powell rhetoric sprinkling through that the Fed actually could be closer to rate cuts. This was the most recent rhetoric, and that's obviously good for the markets. I think if you look at where we are seeing leadership again from the market, it's not massive and it's not out of control. But I look at this relative performance of the Nasdaq to the S&P, and we're inching back to levels where we're getting close to the all-time highs. The index is where it is, but as we say, we were at relative highs back in July of 2024. So that stuff's interesting to me. Semiconductors continue to still outperform a little bit. The dollar weaker, I realize if you're looking at a weaker dollar and a weaker treasury market and a weaker equity market, we start thinking about all those things around deficit and the rest of the world. But for equities just in isolation, a weaker dollar for a lot of these companies is actually very strong. I think that was part of the uptrade today.
So I think part of it, though, you talk about the deficit. I think that for sure, there was a story today on PIMCO and Double Line is sort of on strike, right? Not willing to be in the long bond and, wondering, all right, as this bill makes its way, what will it end up being in terms of how much it will add to the deficit? And I don't know, it's at some point, who knows when, but maybe that's just starting to weigh now. We'll have to see how they choose to fund, right? Probably towards the front end of the curve, probably bills.
Right.
But is there another reason? Is it that people think the tariffs will be inflation coming back later or soon? I don't know.
Right.
Interesting. It's one of those things, man, where it's one of those competencies. I know Chris Patel is much better about the bond things than I am. I'm just, to me, I'm just looking for a damn rate cut at this point. I mean, this doesn't make sense to me why every other country in the world has gone through extensive rate cuts and is continuing to cut rates, mostly Europe, etc. And unfortunately, the United States is just wanting to continue to hold. And I get the idea that, we're having these tariffs that are ongoing and the discussions and uncertainty associated with that. But I mean, we know, and at least I always kind of thought, and it's kind of been realized so far, that was just a negotiation tactic, right? I mean, nobody in their right mind, unless they were fear-mongering, truly believed that we were going to be harping on those rate cuts, those tariffs for an extended period of time. And another piece today coming out that officially the China tariffs were paused. Some of the items were paused until August 31st. So I'm curious to see if CNBC potentially had something on that. And I'm kind of curious to see if, let's just see. Did they have anything particularly on that? Next is benign. Sorry, I haven't been able to keep up with it because I was at work as well. So it's almost as like me coming through and looking through what's going on, just like you guys as well. Let's see, pharma. Oh, this is something I actually kind of want to look at. Housing stocks is something that I'm kind of curious about as well, because we've been toting around and thinking about a potential REIT to potentially add into the portfolio. And so curious if this is something we end up adding as well.
The housing stocks getting hit on an unexpected drop in April construction spending. Diana Olick has the details. Since when, Diana, is construction spending pushing shares of RH down 7%?
Well, look, this read, it's a little bit backward looking because it's based on completions, but it does go along with the drop that we saw in single family housing starts, which were down 12% in April from a year ago. So I'm not sure why it's that surprising. Private residential construction spending overall fell by 0.9% in April. That's the third consecutive monthly decline. Spending was down 4.8% from April of last year. Now, this number includes single and multifamily home building as well as home renovations. Home renovations and apartment spending had already been falling, but this is the first time single-family construction spending fell in 7 months. Home builders are still trying to navigate economic uncertainty from the tariffs, higher mortgage rates, and a real hit to consumer sentiment. We know builder sentiment fell in May to the lowest level in 3 years. So as you said, this is not a happy day for their stocks. The home building ETF, ITB, down about 2%. That includes both builder and remodeling names. And the big builders like D.R. Horton, Lennar, Pulte, all down about the same on the day. Mortgage rates also edged up just a teensy bit today, still hovering right below 7%. That's really where they were all of last week. Kelly, they just haven't moved much at all, not coming down.
Nope, they haven't.
All right. Well, I will say it's been a great time hanging out with you individually, but I do have a extremely rare guest who refuses to come on a midstream. He's been ignoring my messages for weeks, and some know him as Finance Ken. Ken, how you doing, sir?
Hey, Matt, how are you?
Are you gonna show us your face or what?
I could, yeah. What's up?
Oh, there he is.
I'm in my
So,
room, so what's up?
how are things, brother?
Good, good. How about you?
Good. How's life on the home front?
Life is pretty good. Can't complain. How about
What
yourself?
are you buying these days? I know you've been looking at oil. You've been looking at.
Um,
Have you looked at the one that Steve keeps freaking out about, the
I
real estate one?
I did, and there's a few things that I don't like about it right now, and I had said something in the group chat
All right. We'll
regarding
talk about it
wanting
later tonight.
yeah, just regarding wanting to see Q2 numbers in terms of their Q quarter over quarter. I don't like the Q1 numbers that they just posted, so I guess we'll see what happens. So
I mean, hot Ken, man, finance Ken, CPA extraordinaire.
yeah, I mean, just
What else are
been
you looking at, man? Because I know
busy.
you've been dibbling, dabbling everywhere. I'm curious to see. It's been a month or so since I caught up with you. I'm curious
It,
where hot Ken sees the market going.
it's been a while. When a lot of the analysts were short, I was trying to continuously call the bottom. We were wrong day in and day out. So to finally get it correct, it was good. Um, I think the market just continues to pump, right? I think as we continue to see the trade deals come in, it's going to be nothing but positivity surrounding that. What I like right now, or what I've been looking into, it's just been really pharmaceuticals. So it's been quite the gamble. So I'm not gonna, sit on your stream and bore everyone with that.
I haven't checked. Your one that you were touting like 2 months ago. How's that one been going? I forget what it was.
I ended up dollar cost averaging down, and then today it was up about almost 10%. They're reporting their phase 2B trial data this month, so within the next 28 days. I'd imagine it's going to be within the next 3 weeks, more than likely. So we'll see.
So you're gonna be moving to Long Beach Island, or what's the
Assuming everything goes well, we might be,
yeah.
If it goes sour and belly up, then we're not going to be. But I mean, I saw you talking about VG, and I love VG, man. VG's been treating me well. So
what do you like about it? Because I know you mentioned it in our chats, but I've never actually had a full on conversation with you. So I'm curious, as an independent person.
yeah.
Hopefully my streams with Chris and everything didn't bias you too much, but I'm kind of curious, what's your elevator pitch and where do you think it's going? Because I mean I pound the table, and I just want to make sure I'm not.
My like 15 to 30-second elevator pitch, right, would be liquefied natural gas is obviously the future of energy, just in terms of how we're going to be shipping things. So since the United States is arguably sitting on the largest amount of natural gas, then it has to go through the liquefaction process. And seeing as China and India are both, your larger purchasers of LNG, we're at the heart of, we have the selling power, right, and the negotiating power in terms of dictating the price. So that's just primarily why I like LNG, and why I like VG is because it's paying a dividend. It's a small dividend, but like other things, it eventually will grow with time. And I think you said it best, right, in terms of their financials. Uh, you know, although they're not necessarily like the best looking in terms of the cash flows, their income statement is good, right? Like, they're they're operating at, a profit. And that's everything that you should be looking for as an investor, but obviously the cash flow matters too. But this early on, obviously there's going to be a lot of investing cash flows. So you can't be scared of seeing a negative free cash flow, because that capex is going to eat away at it early on. And over time, as long as you see them chipping away at it, and it, slightly turning from, negative towards positive, or, chipping away at the negativity and going, down towards zero, and then hopefully up and up and up, I think it's going to be positive. Again, time will tell with everything else. So TBD.
Oh yeah, that was good. In the background, I'm trying to pull up the investor deck for both Cheniere and Venture Global, because
Mhm.
I kind of want to give everyone a quick comparison, because I think a lot of people try to immediately compare the two companies, and it's actually, in terms of production and everything, ends up being a little bit closer than everybody thinks in terms of EBITDA, and what you're kind of getting in terms of sorry, I'm trying to get all the presentations and stuff up. So it's just an interesting kind of piece that I think a lot of people try to forego, which is like just assuming that, oh, venture is newer, so it probably doesn't have as much quality to it. And so let me just see here, pull up the main slide. It's actually pretty interesting how comparable these guys like present their materials. Let me just zoom in really quick and then share. So here is VG in terms of their 1Q earnings. And so keep in mind where VG is, and maybe this is a good place to put it. I have a good slide in here. That's CP2 expenses. So where is VG in terms of its ramp up? Here we go. So here's 1Q. And this graphic might take a second to kind of get your eye into, but here's actually commissioning and actually online sort of cargoes, right? And commercial. Now that we have CP2, sorry, the Calcasieu Pass original project as of April 15th, commercial, that shows up as purple. But what you want to look at is pretty much where are you in commissioning, and what's been ordered and delivered. So in terms of that, you're kind of seeing, okay, the fourth quarter, you started to get some commissioning in Plaquemines. Q1, you're getting a little bit more, and you're continuing to ramp up throughout the year in terms of nameplate capacity, which gets you to 30 MTPA. So throughout the year, you should see this EBITDA and revenue generation continue to grow. So going back to the first slide, the thing that I'm looking at is mostly adjusted EBITDA, and I know a lot of people like it, some people don't like it in terms of a metric to kind of use. But the way I look at it is you're kind of looking at the profitability of the organization without depreciation and everything like that. These facilities are massive capital expenditure projects, and so when you look at them from a net income perspective, there's going to be a lot of tax breaks associated with what you're actually getting. And what do I mean by that? So in terms of actually the operations bit and how much income you're generating, you're then going to be able to depreciate a lot of these facilities, because it's such a large capital expenditure, the government wants to give you incentives for investing. And so just in this alone, I'm sure you probably have a couple $100 million worth of depreciation costs, which is a non-cash event, So in that respect, it's like this is the actual money that entered the cash register throughout the quarter. And then there was a little bit of ups and downs associated with, I think, some kind of derivatives as well. But I'm just looking at this from like an adjusted EBITDA basis. You're at 1.3 billion. Then if you go to Cheniere, they had 1.8 billion. So the fact that you have this pretty much company that has been online and really throwing out a bunch of LNG now for almost a decade, and they're only producing 1.8, 1.9 in terms of quarterly EBITDA. And you have this other company that's really only been online and not even fully commissioned their second facility yet. And they're at 1.3, 1.4 billion at EBITDA. Yet this company's worth 55 billion in terms of market cap, and Venture Global's only worth 28 billion. So it's like, to me, there's just a large discrepancy between what the current valuation is specifically for Venture Global. Maybe you think that maybe you can sit there and think, oh, Ken's not even here. I was preaching to myself.
Yeah. So I'm it's a little chilly, so I'm changing my shirt. 1 second.
Oh.
Yeah, sorry.
You're gonna do it on stream or off stream?
No, not on stream. I'm not in shape.
That costs money?
Yeah. and I have a tattoo, so I don't want to share the stream with tattoo.
Yeah, people are gonna dox you then. Yeah,
exactly.
Yeah. So yeah, I mean, I just think that with respect to that, there's just a lot of opportunity for Venture Global going forward. Third facility, fourth facility, fifth facility. Should be relatively good. But anyway, enough about that. Let's just see what everybody else has been saying in the chit chat. Let's see. People looking at some of these REITs. No, not leaving. Let's see. Venture Global. What territories? I don't know what do you mean by territories. We got Zocold in the building. We got Midwest, the Dream Team. Let's see. Interesting. What about the VG lawsuits? I think they're going to be minimized. I think if anything, they may have to pay $1 billion in penalties, but I could be wrong on that one. Ken, what are you looking at in these markets? Do you think we're going to the moon or what?
I do. I really do. Also, what are your thoughts about, and I hate when people keep saying it or mentioning it, Tesla buying Uber. I don't know if you've covered it yet, but what are your thoughts?
Are they actually, or is it just
it's just like a hypothetical.
I think that Elon probably would rather come up with his own application.
Agreed.
Personally, than trying to bolt on an Uber into his infrastructure.
Agreed. I don't think it'll ever happen, but there's people that are mentioning it, and it's frustrating when they keep mentioning it because with the robotaxis launch this month in what is it, Houston or Dallas, or is it Austin?
Austin.
It's somewhere in Texas. Yeah.
I mean, you could make the same argument actually, because I saw an actually really good graphic about Waymo surpassing Lyft in San Fran, and there was a graphic. Let me see if I can find it.
Well, someone said Rivian just partnered with Volkswagen.
Did they?
Or yeah. Huh.
Can I expand this? Can I open in a new tab maybe? Okay. Let me share this. So there was another graphic that actually showed this way better, but because this is now a couple months old. But here's the market share of the San Francisco market, and keep in mind, I mean, I have no experience with Waymo. I've been very bullish Waymo, but I think in all honesty, I don't necessarily know all the ins and outs. There's been a couple opportunities for driverless cars here in Houston that they tried out, and that got shut down pretty quick. I think there was like an accident or something with respect to that, so they shut that down pretty quick. But anyway, in terms of San Francisco, this has been probably the biggest trial. That and Phoenix, I think, for Waymo, and with that, this is back in November timeframe, so this is 6 months ago.
So it's less than a year that it took them to
Pretty much.
surpass. Yeah,
Pretty
wow.
much. And growing, right? So
Yeah.
I'm hoping I can find. Let me see if I can continue to find. Oh, here it is. Yeah. Let me see. Share this tab. Sorry, it's a little bit, but here's got the most recent data, so it actually shows up a little bit better. Let's make it like this. So you guys can see it's over 25% market share now, and you can see it's easily eating into Uber and Lyft. I mean, that's the only reason why Uber and Lyft are going down, right? I mean, otherwise they'd be fighting amongst themselves. So it's very interesting that within 2 years' time, not even a year and a half's time, and going on 2 years, it'll have gotten to a 30% market share. But I'm curious, though, kind of like what, I mean, San Fran does have a little bit of tourism.
Yeah.
But I would say, I would probably assume more than 80% of the rides. I'm just throwing out a number. I don't know the statistics. I would assume more than 80% of the rides in San Francisco are probably normal, people. Yes, 20% of it might be tourism. But so, I mean, you might have an influx of some of that market share being due to the fact that people want to try it out. They don't have Waymo, but like, I mean, you have this now almost going on 2 years and consistently growing. To me, that's very impressive. I mean, it's counterintuitive to a lot of the narratives. And the reason why I bring it up is because I'm curious if Elon, when they roll out Robotaxi officially, if they see comparable sort of market share being eaten from Uber and them. And if that's the case,
like matching Waymo, you're saying, like,
exactly.
Yeah.
Yeah. It's like, I mean, if you're easily taking away market share, then why spend the money?
Right.
And I kind of think the same thing for Google. It's like, well, Google's probably looking at this and being like, well, why would we buy Uber?
Yeah. Now, is
there
a slide that breaks down like the cost per mile, or just like the average cost?
Like over time?
Yeah, like you know how like if I take an Uber, right, and like it quotes me a price of, I don't know, if I were to go from Long Island to Manhattan right now, I mean, I'm sure it would probably give me like a price of around $120 to $200 more than likely. Like, do they have what the cost per mile is for Waymo?
I haven't seen it.
No, okay, because like, I would wonder, like, do you end up saving more money if you book with Waymo, and is that why they're eating away at or chipping away at like the ridership from both Uber and Lyft in that city? Like, is it just a cost advantageous ride sharing platform?
I don't know how real this is. This is just what Google put up, but keep in mind, Google is Waymo. So Waymo 1 ride costs around $2.66 per mile on average, based on a few tracked rides. So how many rides? I don't know.
Yeah.
25% less expensive than Uber or Lyft, and there's no tipping required. That's the thing I didn't remember. Some studies indicate Waymo can be more expensive on a per mile basis, with some reviewers noticing a 30 to 50% difference, which I know that Amit said something like that as well. But one thing that Amit, because Amit's my only experience with Waymo in terms of like personal, which I'd actually love to give this a go. I would love to try it out. But they had issues with like, oh, you had to go to a certain location to get dropped off. But it's like, I had the same experience with Uber in Vegas. You know what I mean? Like you have to go to certain locations. They're not just going to pick you up on the side of the strip.
Right.
You have to go to certain locations from the hotel to be able to get picked up, which actually can sometimes be a pain in the ass, because if you're at a certain hotel, you're like, oh, I'm at the location. It's like there might be one or two, like there might be 2 or 3 locations that they pick you up, and you're like, oh, I'm at the wrong location. But anyway, so anyway, I'm curious to see what. I've always been bullish on Waymo. I've always thought that people thought that Tesla was going to be the only game in town with respect to full self-driving, and while it is bullish, and I think the product is great, and I try to like get people to like, I am very bullish on the company Tesla, but the stock price to me has always been the sticking point where it's always just seemed overvalued. And, of course it's meant that I've lost a lot of opportunity costs in terms of not owning the shares, but
Right.
I don't know. So what are your thoughts? I mean, do you think they're going to,
I mean, like Tesla, I think robotaxis might be the future in terms of like, or in general in larger cities, right? Take Manhattan, for instance. I don't know if you witnessed that video or saw the video that was circulating on X where some guy, just went in Manhattan and had the full self-driving on, and, it picked up bicyclists, and there's plenty of them in Manhattan, and they ride on their bikes like morons, to put it politely. You also have a lot of foot traffic, and then add in the cars that are there too. The car handled every single situation perfectly. Um, so I do think like robo taxis could be the way, or even Waymo as well. Like, I won't just say one over the other, I guess, for argument's sake, just because I've never experienced either or. I've experienced the full self-driving feature, but not, I've never been in a car where like I'm actually the passenger and it's just driving itself. When I'm in my car, which is a Tesla, like, I'm still monitoring it driving, because it's the full self-driving, but it's supervised. I should have led with that. Um, I think Tesla has a lot going for them with, the Optimus. Take jobs like factory workers, for instance, like where you're lifting heavy machinery. I think that's where the future lies for Tesla, primarily. And, I guess, again, with, moral of the story would be time will tell.
right,
So, yeah.
right. Interesting. What
What
else
do
are
you
you
think?
buying? No, I like the Optimus piece. I think it's interesting. There's a lot of players. There's Figure. There's
Hmm.
Aptronic. There's Optimus from Tesla, and it seems like there's been some ongoing consolidation in the space as well. So I'm curious. I'm sure there's going to be continued consolidation. There's certain people that are obviously spending a lot of money and having to raise a lot of capital, but not getting the revenues as of yet because it's still kind of in the R&D phase.
Yeah.
But yeah, I mean, I'm very bullish in terms of long term on robotics. I just think it's going to be
Yeah.
tough
100%.
until
100%.
now, until 5-10 years from now, for them
Yeah.
to truly get.
And it's hard to see or call the winner in 5 to 10 years, right? Like, you don't know whose robot is going to be the leader or the market leader. We're like, if you were to ask like most Americans what, their favorite cell phone choice is, most of them are going to choose the iPhone over an Android phone, more than likely, which would be a market leader here. But I mean, on a global scale, it's pretty 50-50 though. So do you think that the robotics aspect would be 50-50, right? Like Figure has a great product out or a great robot, who's going to be the leader here in the States, and then who's going to be the leader over in Europe? Maybe it's going to be a 50-50 market share.
It's also true too. I mean, like you stated, certain companies get certain restrictions. I mean, I think we just saw that Google is going to be sued by like the German government or something today. I'm not too articulate on the matter itself, but I saw that kind of come through, and I'm like, here's another lawsuit for Google. or Alphabet rather, like why, but that's a different story for a different day. But you're right. I mean, it could very well be that you end up having different companies succeed in different areas because of that sort of regulatory reason, or fines, or to limit market share, limit monopolies, etc.
Yeah.
I don't know.
Yeah. And I mean, like, take like, drugs, for instance, right? Like now you have a lot of, just open label drugs or over the counter ones, the generics. So who knows? Like, you have your patent for, what is it, like 15 or 20 years on your drug. And then once that expires, any company can go out and make the same formulation or similar formulation and market it to the people. So just not
What
comparing apples to apples, but an apples to oranges perspective.
what else are we buying, Hot Ken?
You know what I'm buying. You want me to tell it on the stream? You want me to just shout it
Only if
out?
you want. I mean, I'm not going to force you to.
No, I mean QXO is obviously one that I absolutely love, that I've tried telling everyone tooth and nail, fighting with Steve tooth and nail, and Steve obviously hates it for reasons that are unknown. Oh, their financials, oh this, oh that. I mean, you're buying the name, right? You're buying who's leading the company. You're not buying them for their financials today. It's like that. It's the same argument that you can talk about with robotics, right? Like, there's not going to be many, or there's not going to be much revenue stream coming in just yet. QXO, I have my reasons for why why I'm buying it hand over fist. Brad Jacobs, that's the name that everyone needs to know. You look at XPO Logistics, that's what Brad Jacobs founded. He spun off two companies from XPO. So, RXO and GXO are the spin-off companies, or what was spun off from QXO. XPO, I'm sorry, not QXO, XPO. But QXO is what he just, founded. And he's going after, sorry, what?
No, I was just going to ask
Mhm.
if you had any thoughts about. I didn't mean to cut you off. I was going to ask you if you had any thoughts about any space stocks, or, but I didn't realize.
Rocket Lab.
Well, either one. It doesn't have to be Rocket Lab. Could be STS. Could be.
I like Rocket Lab. Someone that I follow and that follows me has he's put a lot of ink on the paper for me with regards to Rocket Lab, and it's just opened my mind to a lot of the unknown for me.
Do you want to share specifically what, or is it kind of?
Yeah, let me just go to my messages so I don't butcher what he's said to me, and I'll paraphrase some of it. So he was talking about how space is going to be the next generation of a war, which I completely agree, and that there's only a few serious players in that industry right now, with the leader being SpaceX, and their last round of valuation was roughly 300 or more billion dollars. And then what got him laser focused is that institutions are buying it, or buying into this space. And obviously, if you see institutional ownership going up, that's a positive sign, right? Follow the money, is what everyone says, right? So his whole thing was Rocket Lab's the most vertically integrated space play. They have tons of different companies from their acquisitions, which allow them to compete in a lot of areas, to track down and even get contracts with the Department of Defense that most of us can't see. And then, he further went on to say that, Raytheon became systemically important to the United States government and the Department of Defense. And, their chance of going BR is as close to zero as you can get for a public company. So BR meaning bankrupt, right? So someone said that Jim Cramer endorsed QXO. I wouldn't let that shy you away from the investment in QXO. But back on Rocket Lab, he said that the big things that he's looking for in a company is, that it's founder led, the moat around the business, forward business model, and that they're financially conscious executives. So, and then he just thinks that space systems, infrastructure, and space vehicles are the real business for the companies, and Rocket Labs covering all of that.
So, do you know why your buddy Marty doesn't like Rocket Lab?
Marty?
Mr. Shkreli.
Oh, I have zero idea.
Oh yeah.
I couldn't even tell you. He has a lot of strong opinions.
Yeah.
He definitely does. He has very strong opinions about the quantum field, the quantum industry. And I agree with him on those. But if I knew that he didn't like Rocket Lab, I would disagree with him on that.
And it's not to say he doesn't like the company. He just, from what
Yeah.
he said, I know he put it on like his bubbly list or something like that a couple, like a month or two ago, and he was right. Obviously, with the tariffs, everybody was right that the market was going to go down. So he timed it well with respect to that. And when Amit had him on the stream, I guess last week, he basically said it was bubbly. He didn't necessarily say he disliked the company.
Okay.
He just thought that it was bubbly in terms of, maybe there's going to be a pullback.
I sort of feel like that too. Like I'm a little skeptical right now about its price movement, if I'm being fully transparent. Like it's run up a lot in the past month or so, or call it 3 months time, right? Like go from
it's
March
been like what,
to now.
80%? Yeah, something crazy.
It's a little daunting and overwhelming. And I'm sure Martin Shkreli would call a lot of the people holding Rocket Lab baggies. He loves that term. So, but like again, who knows? Like, are you wrong for holding it? You can't say so. If you think it's the future, if it pulls back, you dollar cost average down, or if you feel like there's going to be a pullback, you sell some, and then you just pick it up when that pullback happens. But no one can time the market; it's damn near impossible.
And it's tough.
But
Yeah,
did you look at QXO? Like, what are your thoughts about QXO?
I actually haven't. You kind of got my my interest on it. I know that you've mentioned in the past, and unfortunately, I've never really dug deep into it. But it seems like it's something where it's like you're not chasing something that hasn't been done before.
Right.
So that gives me a little bit of confidence. So like it's at that point just going to kind of come down to the numbers. Like,
yeah.
Sorry, go ahead.
Look at the other company that Brad Jacobs led, which is United Rentals.
I've seen that one.
Yeah. So have a lot of people. I didn't mean that in a bad way, but so have a lot of people. You see their trucks all over the road now. But like everywhere. United Rentals is a company that on an all-time chart, it's up, over 4,600%. 4,600%, which is insane.
That is
and
insane.
then you look at XPO Logistics, its all-time chart, that's 5,900%. But Brad Jacobs came in when it was around 5 or 6 a share. But still, like he's not a stranger to this world.
Seems like this guy just like likes kind of that warehouse sort of like auxiliary sort of business.
He gets into a company and he does a lot of M&A activity.
What was the third one? You said RPO, something like that.
RXO. So XPO spun off 2 companies, which is RXO and GXO. I don't know how many shares you got from the spinoff in each, but RXO, I know that one doesn't, that chart looks terrible, but still, you got another publicly traded company for just holding XPO. shares in XPO.
And GXO is flattish
Yeah.
over that time.
And
Interesting.
then, he also sold United Waste Systems as well. So he has a ton of experience. And that's why a lot of people that know him or that follow him will buy QXO hand over fist because, he's openly stated that, he plans on turning this into a 50x play, so
Can I ask some clarification questions? So it's a $9.5 billion company.
yeah.
If you look at this chart, no bueno, right? Like, it
So
obviously.
that chart is very misleading because it was a reverse merger with
Got it. That's
with
what that was my question was. There has to be something going on here.
yeah, exactly. And that's why the company that it reverse merged with was so thinly traded that traders, whether you want to say it or not, were manipulating it into going higher at that time. So because like the average trade volume, I think at the time was like maybe 25 to 50,000 shares a day. So then when you have a spike of over 1 million shares, you're going to drive that price up, and it was getting halted in and out, day in and day out for that time period, or for those few days that the volume was that high.
Let's see.
So I wouldn't let the chart shy you away, but it was a reverse merger, and then obviously, he flooded the market with a lot of more shares.
Anything in the deck that
Hang on, let me open it up. On
the
my end,
largest publicly traded distributor of roofing, waterproofing, complementary building products in the United States. I mean, that alone, they're the largest of them. Then that's pretty important because roofing, waterproofing, all that stuff, that's not going away.
No. Hang on, I'm getting it open as well. Yeah, like, so you see that first highlight, building a $50 billion revenue company,
Yeah.
and then go to the statistic because they merged with, or they bought out Beacon Roofing Supply, which I forget what their I forget. I think it was BCN was their ticker. Let me see if I can get their quarterly results. So yeah, so their sales revenue for the 3 months ended March 31st was 793 million. Or no, I'm sorry, 1,000. Yeah.
So this was Beacon.
But I mean, this is one where I would highly recommend, doing the due diligence and looking into Brad Jacobs himself.
Interesting. Yeah, I'll have to look at the numbers. So when's a good reference point? So I guess
A reference point in terms of what?
When they actually reverse merged, and you can at least say like, okay, count it from here. Like, is it that July 31st, 2024 point forward, or is it?
Was it July 30th? Maybe, like, I think it was around July 30th.
Okay, so basically coming up on a year. So anything prior to this July 2024, ignore.
Correct.
Basically, once it hits this $10, $11, $12 kind of baseline where it's kind of been at.
Yeah, and I know I sent you gents a high-level presentation
You probably did
a while back. I have it. So it was in, yeah, you can pull that up if you want. Just don't dox my email though.
hotken@gmail.com.
Yeah, exactly. Here, you know what? I'll re-forward it to you. How about that?
Yes, that works.
Let me do this now.
Hawken at Gmail.
It should be coming over in a second. To
Is
you.
it in the
It's in your Gmail inbox.
Oh, Gmail. Got it.
Yeah.
I was looking at the
So, I mean, you know, obviously it's a very high level presentation that I put together. It was for you guys, and you guys meaning you, Chris, Amit, and Steve.
damn it. I thought I had signed into this damn email.
Wow, your chat is people are talking about reverse cowboy,
Jesus.
reverse marriages. I don't know what the hell is going on there, but
Now you know. Let
yeah,
me see if I can send it.
good for them, you know.
Good for them.
Oh
What?
man.
Why isn't it? Let me see. There it is, hot can. Can I forward this to myself on WhatsApp for ease of bringing it up? I do remember seeing this now. So that way I don't. Damn. Let me open it in slides. It should be there. Open. That's what I want.
Do you want me to try and send it to you in?
No, I got it.
What's
I'm
that?
just,
Okay.
yeah, sorry.
Yeah, no worries.
I forget what for some reason somehow share this tab. Let me just make sure it's not sharing any of my. Okay, it's just this tab. For some reason my computer logged out of all my accounts and everything like that.
Yeah.
And I just have to figure out which password it is.
Gotcha.
So it's on I had it on my phone. I just needed to transfer it really quick.
Mm-hmm. I mean, and again, this is a very high level presentation, just with summaries. So
Interesting.
yeah, and it talks about the team that he's building around him, their experience, and who he is, what their strategy is, the building product distribution, industry highlights, and then the planned markets to be tapped. So
this guy, this Brad guy,
mhm.
is he kind of like an operator, or is he more of like an M&A guy? Because I mean, what you're saying, it makes it seem like he looks at a space that needs consolidation,
Mhm.
and he focuses on kind of getting that consolidation to.
Yeah, I would say he's an
drive.
M&A guy at
Okay.
heart. Yeah, and again, just by going through his track record, he's a proven winner, right? You look at United Rentals, you look at the Waste Company, then you look at XPO Logistics, and now you have QXO, which might be his last hurrah. But if it isn't, whatever one he goes to next, I'll be buying that one hand over fist too. Hopefully, we get one more opportunity out of him. But this could very well be his last go around.
I mean, some say the same about you.
I can go for round 2, Matt. Don't worry. I got
I
stamina.
I hope so.
I got stamina.
More stamina than me. That's all that matters. curious. What did you see? What Jerome did today? What was that all about? I heard that he was supposed to retire. Just kidding, but
I didn't know.
you didn't see. Okay,
Yeah, no, I
I'm
was
trying
busy.
to catch up myself about all
I
these
was busy
things.
trimming the hedges at the house. So
See, you're a grown
yeah.
man. Love that.
Yeah, having a lot of fun.
Let's just see. Let's see what this guy's got to say.
Platform now comes with the power of Morgan Stanley.
Yeah, let's see what these guys have to say
I'm going to share his outlook. PIMCO Global Economic Advisor and former Fed Vice Chairman Richard Clarida. Rich, it's great to have you on. Thanks for being here.
Yeah, look forward to it.
So, you know, we have Chair Powell on the record a couple different times, essentially saying, you know, when the risks seem like, you know, they both maybe are a challenge to the employment mandate as well as the inflation side of the mandate. You have to figure out which one looks like to be the bigger risk at a moment in time. What's your assessment of that, and what's your assessment of the Fed's read on that right now?
Well, I think their read is that there is still a lot of uncertainty about tariffs. You know, the reality seems to change day by day, the court rulings. You know, the models tell them that if the tariffs go in place and stay in place, it'll both push up inflation, at least for a while, and push up unemployment. And so I think they came into the year thinking they were in a good place, and I think they're happy to sit on their hands and let the data come in over the coming months.
Does it still seem as if they can be comfortable in a wait-and-see mode at this point, just based on how some of the growth data have been? I mean, obviously, it's mostly held in there, but, you know, the labor market's decelerating, housing market is kind of stuck.
Exactly. You know, I think that underlying GDP is probably running either at or north of 2%. Obviously, the first quarter was held back by the trade. And if you believe the Atlanta Fed GDP now, we could be looking at a gangbusters quarter. So average out, the economy is growing around trend or maybe a bit above. You know, and the inflation data has been good. Year over year, PCE inflation came in last week at 2.1, which was the lowest in 4 years. And I think on your labor market point, I think they expected the labor market to slow this year. Payroll gains running around 100,000, I think, is certainly something that they would be fine with. And of course, we'll get another payroll number on Friday.
For sure. I guess the question is how restrictive the Fed even thinks it is right now, with rates, you know, above 4.25 on the short end. And I guess if that's going to motivate them in one direction. You know, we heard Christopher Waller, you know, say that essentially he could see good news rate cuts coming if, in fact, the Fed treats the tariff price impact as transitory.
Yeah, I did see that comment from Governor Waller and other Fed speak, including, I think, Lori Logan today. And we had Tom Barkin last week also. So you've had a lot of Fed speak. I think they're comfortable waiting. I think there is probably a scenario for a so-called good news cut. I think that's really going to depend on what we see in the inflation data. And I think several Fed officials have emphasized the importance of getting some certainty about what the ultimate tariff program is going to look like. And right now, of course, that's up in the air. So that's another factor as well.
Yeah, I mean, it's a very good point, just how contingent it is, because, you know, it was a couple of months ago, or I guess you could have said, wow, the Fed is at risk of being behind the curve here if we're going to go to these maximalist tariffs. And then you can just dial back and say, never mind on the tariffs. And all of a sudden you have a very different economy.
Financial conditions, of course, are much more broad than just the federal funds rate. You've had a nice big rally in the equity market. You know, bond yields are more or less in the center of the range they've been in for the last year or two. Credit spreads have tightened. And so tighter financial conditions were the story a couple of months ago. Most of the markets seem to have digested the tariff and trade news pretty well so far.
It's a rare thing when someone you've been with for so long finds a way to surprise you.
It's a CNBC contributor, Peter Bookvar. He's the chief investment officer of the Bleakley Advisory Group. And Peter, you've got some interesting thoughts in your book notes today. Your morning report We've been looking at oil prices this morning, trying to figure out why they're higher, even with OPEC Plus agreeing to put more supply on the market. And you've got some very interesting points about what's been happening with the rig count. We always say that low prices are cured by low prices, meaning that producers don't produce if they're not going to get paid appropriately for it. What have you seen with the rig count lately?
That in the entire month of May, the rig count has fallen every week. And now for crude oil in particular, the rig count has fallen to the lowest level since 2021. So to your point, we're in the process of seeing low prices cure low prices. And that the people have to understand that over the last 15 years, U.S. shale has accounted for more than 80% of all non-OPEC supply growth. So there are signs that geologically and also price-wise, the U.S. shale production is topping out here. And I think that that is the offset to OPEC, where while they're raising quotas, they're probably just raising them to what existing production already is.
What is key about this? Is this U.S. manufacturer saying, look, we're just not going to pump at these prices? Or is there something else that's taking place here? They're not able to produce more.
Well, it's both. We heard it in just the earnings just reported over the past couple of weeks, particularly from Diamondback Energy, where on a price basis, yes, they're producing less, but on a geology basis, shale basins are topping out in terms of the production. Permian is really the only thing left in terms of adding growth, and there's some signs that that's topping out as well. To my point earlier, U.S. shale has been a major sort of swing factor outside of OPEC in driving energy prices. And I think oil prices here at $60 is dirt cheap, and we're about to see an inflection point here to the upside.
Peter, let's talk a little bit about the steel and aluminum tariffs that are set to go from 25% to 50% this week. What are the implications more broadly across the economy?
Well, obviously, certainly a positive for steel. I'm not so sure on aluminum. I mean, Alcoa themselves said they're not a big fan of aluminum tariffs. Steel stocks are obviously rallying, but there's a lot more users of steel than producers of steel. So if you're doing construction, or if you're a drilling rig company, well, you use steel to produce some of the product that goes into actually drilling. So it's going to be interesting to see how the manufacturing side is not going to be happy with another spike in steel prices. Take multifamily housing, for example, which flows into CPI. Well, this is not going to be a good cost input for the production of more multifamily housing. So while it's certainly going to help steel, there are a lot of other collateral damage on the users of steel.
Okay. Peter, I guess your point being that the jobs saved in steel maybe are lost in other industries too.
Probably more jobs lost in the users of steel that are sort of kept and hired within steel. And on
All right, that's interesting. Yeah, I mean, I'm kind of stuck in between a rock and a hard place, man. I mean, I always thought that oil was really going to come down, and it has. I mean, oil prices, I think, are in the $63, $64 range. I think the reason why we're even seeing quite a bump up into the 63, 64. I think there's currently some ongoing wildfires, which are impacting Western Canadian oil producers. So some of that production is unfortunately having to be shut in. And so, you see an immediate shut in of 700,000 to 1 million barrels a day, which I think is what's been impacted in Western Canada. That's immediately going to increase the price. But as you guys know, we talked about this on the channel quite a bit. Oil, in terms of the current supply, I mean, OPEC is choking back artificially, right? And so it's a very fine line between what is being produced and what the actual demand is. And so it's interesting to see. And so to me, I think the fact that we're in June and demand is generally peaking out during these parts of the year, and yet here we are, not necessarily seeing a large spike up in terms of production, prices. Let's just see. Let me see if there's a latest graphic. Here you go. Can I share this? the fact that we are in the summertime frame, and you're not necessarily seeing anything too crazy in terms of oil price peaks or anything like that, just kind of makes you scratch your head, in terms of what's happening next. And I agree, you are starting to see some sort of topping out. And this is something I said not too long ago on the channel. For the folks that are following with respect to, what I talk about with respect to oil, I think you hit the nail on the head. The Permian, I think, makes up about 50% of this production that you're seeing. So we're about 13.5 million barrels of oil per day in the United States, of which we export a good bit of it, and then we import about 3 to 3.5, maybe 4 million barrels a day from Canada, give or take a million. And so we take some of our oil, which is kind of lighter, we export it, and then we import what comes in from Canada, and it's a heavier sort of crude. And so some of our Midwestern refineries are actually suited to be able to handle those. And so it's an interesting kind of trade all around, because a lot of North American parties are involved. But a lot, like you heard, as you kind of see, we took a dip to about 5 million barrels in the mid 2000s, and then we really started focusing heavily on the shale revolution, which allowed us to literally increase production rates by over 150%, in a very short amount of time, 10 to 15 years, as you've kind of seen. And so with that, what we have been exploiting are several very prolific basins. First, it was the Williston, then the Eagle Ford, then the Permian. And now with that, you've kind of been at exploiting all those different benches within each of these sort of basins, and you have yet to truly backfill the remaining opportunity that you kind of have going forward for different areas of the system. So it's not to say that we don't have the oil per se. I mean, if you were to have infinite sort of prices, there's plenty of oil here to be made in the United States. It's just a lot of it, unfortunately, doesn't have the transportation set up. So just like how the Permian 5-10 years ago didn't have enough pipelines to be able to build up to 6-7 million barrels of oil a day, now you've got the infrastructure that allows you to produce up to 6-7 million barrels of oil a day. You're not having to pay people to take your natural gas anymore. You're actually getting money for your natural gas, etc. You have a lot of places in the four corners of the U.S., Colorado, that Rockies area, where there are literally billions upon billions upon billions of barrels that are waiting to be explored and exploited and brought to market. It's just unfortunate that at this moment, you don't necessarily have the economics to do so. And so let me just see if I can bring up like a decent image. Yeah, I mean, there's a lot. I mean, a lot of. Let me see if I can get a good map for you guys. Oh man, is it not gonna? I want to get a good map for you guys. How come I can't? Can I open this a new tab? Come on, man. Doesn't need to be interactive, but sure. How do I zoom in on this bad boy? Let me see. Let me share this tab. So this is just tight oil and shale gas. So you can see, I mean, there's a lot of opportunities, right? Where we are producing. Here's the Eagle Ford and this purple. And then the blue kind of on this side here is actually the Permian. You have the DJ Basin, kind of this whole area here. And what I'm kind of referring to is this area. There's a lot of benches in here. Here's kind of the Williston Basin. This has actually been doing rather well, but it's more mature, has made a lot of money in there in the early 2000s and the early 2010s. Now it's kind of on the decline. But you have a lot of volume kind of remaining in this part of the country that just needs oil prices to kind of go up and infrastructure to be put in. I mean, this is a very remote part of the United States in terms of infrastructure, and doesn't necessarily have everything. Here you can see this light green is the Marcellus, and a massive amount of gas. When it comes to that, believe it or not, 180 million years ago, the reason why the Marcellus is here, a little bit of geology for you, which I'm not going to do justice, but the reason why it's there is because 180 million years ago, this used to be pretty much a big lake. And so what ended up happening is the lake bed, you have all this sediment kind of dropping down and kind of being burrowed into the shale. And over time, as you had more and more sediment built on it, you bury all this sort of rock and it gets heated up. And that's what turns that organic content into natural gas. But anyway, a little bit of geology lesson for you guys there, though. But hey, guys, we're actually going to transition this party, if you don't mind, over to Rocket Lab launch. And I didn't even name it appropriately. But I know, Miss Junebug, you've been asking a couple questions about the launch today. Do I think solar flares are going to impact it, etc.? I don't. But if they did, I would expect, if I had a lot of concerns for it, I would expect that Rocket Lab themselves would mention it a good bit, but they haven't said anything. So very curious as to why. But we will be live in that particular link for watching the Black Sky Gen 3 full stream ahead. 65th Electron launch. It should be a great time. So we're going to transition over to there. We're hoping that we start to see the stream from Rocket Lab start imminently. It may have already started, but I don't think we'll see a launch until closer to the top of the hour. So you'll probably have 15 to 20 minutes before we actually get close. So if you want to grab a cup of coffee, some drinks, etc., feel free to go ahead and do that. And I'll probably wait to kick off my stream until Rocket Lab gets theirs initially kicked off, because otherwise we're just sitting and waiting. So appreciate you all. Hope to see you on that stream in just a moment. Cheers. Thanks, you all.